I'll go just alone. I can't stop scratching my mind. I gotta keep asking why. Stop telling me all the time everything will be fine. I can't stop scratching my mind. I don't know. Can't see through your skin. I'm not your guardian. I can't see through your skin. Can't see through my skin. Everything will be fine. Stop scratching my mind. I don't know. So
And engage. How's it going, everybody? Welcome to We Talk Money. We're here. We're pissed off. This is, you guys just missed like 10 minutes of railing.
We'll get there.
Yeah, we'll get there. Probably third topic of the day. We're going to talk about how Facebook is just the best company ever. And
I mean, I'm happy that I own some, but for earnings sake. But anywho,
can a shareholder get some help here, please?
yes, exactly. Oh, look at me. I see myself on my own computer screen. Okay. How's it going, guys? Welcome. If you're watching live, thanks for being here. If you're watching this after the fact or listening to it on the podcast, thanks for also being here. Today's show is actually brought to you by our first sponsor ever, which is YCharts.
Yeah.
A lot of people in the crypto space don't know what YCharts is, but I know for, investment advisors and pro traders on the stock side, it's like actually a really valuable resource. So you guys have much more experience with it. And the reason why, Nikki, I know you really wanted them as a sponsor is because you love the platform.
Yeah, actually, I use it, and I was like, I need to connect.
What do you guys love about it so much?
Well, I love the simplicity of it. I've used a lot of different platforms, and YCharts is really easy to use for most people. And I really love their screener. Their screener is like my most favorite thing right now. I've been playing around with it and using it for so many things. I've used a lot of screeners, but this one in particular at YCharts is very, very, you can get really granular with your screen searches, and you can really drill down to different factors, different metrics. So I'm really loving that about it.
Sweet. Yeah, I know they added crypto stuff, I think recently, but Trav, what about you? What do you use?
Yeah, I mean, I'm a tools nerd, and any tool that helps me like do my, stock fundamental research deeper or better is always cool. So
yeah,
I mean, not to, blow too much smoke about it, but I really like that it's a clean interface. It's got lots of data behind it, so they have a lot of good data feeds, and I'm still kind of just working my way around the tool, trying to figure out what I can do with it.
Yeah.
But it's pretty powerful. So yeah, I really like being able to dive in and chart fundamentals like over multiple years for a given company, or be able to download data into Excel, like raw tables of data, so I don't have to go necessarily to the SEC filings and stuff like that. So
yeah,
those are some things I'm finding some value. But yeah, I mean, we reached out to them because we were like, hey, we like your tool and we'd love to promote it if you would like give us better access to like the more premium features. And so they were cool with that. So.
It's funny because I've had dozens, if not hundreds of like crypto companies that have reached out and been like, can we be a sponsor? And I said no to all of them. And then Nikki and Trav, you both were like, we love YCharts so much. I'm like, hell, why not? It's not an ICO scam, so.
Yeah, maybe Masari will be next.
Yeah. No, there's a lot of great tools out there. And one thing I did notice is on Twitter, a lot of guys and ladies that do just really interesting charts and ways of like quantifying different macro statistics and being like, look what's happening in real estate, or look what's happening over here. A lot of that data is usually on a YCharts thing. So I'm really looking forward to geeking out on that more too.
Yeah. Awesome. When I was a professional, I had a $30,000 Bloomberg terminal, $30,000 a year Bloomberg terminal.
Yeah.
But as an individual investor, that's a little bit of a steep price tag. So something like YCharts really fills a pretty big need.
That's true. Yeah. It's kind of like middle ground.
Yeah.
Awesome. All right, guys. Well, let's go ahead and get it kicking. Welcome. We've got actually a lot to talk about. I'm super excited. Because I'm making a lot of money right now. That usually helps. So Ethereum, let's just jump in and talk about the markets real quick. Ethereum just today hit my first major profit target. So for anybody that doesn't know, just to give you a recap, I started buying Ethereum for the first time back in, was it 2015 or 16 at $1.50? That was my first trades. And then most recently over the past year, we actually took what I call an accumulation range breakout trade here at 350. And then took an ad here on the all-time high breakout around 12 to 1400 through this zone, and my first profit target has been up here around 2800. So we just hit that. You can see, like, for you guys that are looking at the chart, this thing retested and took about 3 months for this trade to work. So 90% gain or more from the all-time high breakout in just a few months is pretty awesome. Obviously, Doge is crushing that if you bought during the accumulation, but this is why I love crypto, man. There's just so many amazing high flyers when we're in these bull markets.
Heck yeah, you nailed that ETH trade.
Also, the other chart that we can look at is ETH BTC. So when you compare the value of ETH to Bitcoin, this is what a lot of Bitcoin maxis will say, like, oh yeah, ETH is up in dollar terms, but it's not up in Bitcoin terms. Well, you can see we've actually got this really big kind of inverse. I guess this is kind of a head and shoulders, but basically just a rounding pattern where we just broken a multi-year high against Bitcoin. So this is typically what happens, guys. guys, is like Bitcoin will have a big bull run, right? So we just ran from 10K to 60K over the past, 6 months or so. And then Bitcoin recently had a pretty big pullback, right? From, call it like the high at 65 down to the low around like 47. And when that happens, what happens is not everybody that sells Bitcoin will sell back into dollars. They'll sell some into altcoins. And so usually you'll see first, like the larger caps will start popping. And so that's why I think Ethereum has really had this big run. And obviously there's 1,000 altcoins we could talk about. But this is my second largest position, and it's just really nice to see how beautiful these charts play out over the course of several months. If you're trying to day trade, it's probably too random and spiky and just messy, but I really like swing trading and position trading crypto because the trends and the charts are just so beautiful, and it's such a fast growing space.
Yeah.
So
you gotta be brave to be day trading cryptocurrency.
You gotta be insane to want to day trade in and out of it. Like, you'll just get blown out.
Way too volatile.
Yeah.
Crazy.
But that, that's my pat on the back for myself. What have you guys been up to?
Congrats.
What's happening in stonks?
It's earnings season.
Hey.
Finally.
Yeah.
This is a big week in earnings season because basically the majority of the companies that make up a huge percentage of the S&P 500 are either have reported or are reporting this week.
Yeah. So if we look at, what's today, the 28th, Apple is releasing on the 30th.
Apple released today.
They did?
Yeah.
Yeah.
They released after the close.
Oh,
They
okay.
released after the close.
Gotcha.
So Apple released, Google released, Microsoft released, Facebook released,
Amazon's
Tesla
coming up.
released. So yeah, I mean that's a huge majority.
So I haven't checked this at all. So you guys can bring me up to speed. Like, what does it look like?
They're all blowing out
Yeah.
earnings.
Really?
Big tech is still big tech.
Big tech is still killing it. Mostly, yeah. I think Facebook, Google, Amazon, all the numbers, Apple, all looked really, really strong. And even Tesla's numbers were pretty good. But, it is interesting to note some of the stocks that have reported good numbers have had fairly muted or weak reactions to the earnings report. Now, if you really blow out the numbers like Facebook and Apple did today, then, you don't have that problem. Google as well. Those stocks have been up 4 or 5% after hours. But some of the other stocks like Netflix and Tesla, even AMD blew out their numbers yesterday.
Yeah.
And the stock popped after hours, and then this morning kind of trailed off.
Gap and crap.
So kind of interesting to see. There's a lot of high expectations built into this earnings season and into the valuation of these stocks.
And that's what we were looking to see,
Yeah, you guys said that last week, I think, which is like now things are coming due. It's like, okay, everything's up so much.
Yeah.
Let's see what the companies can actually do and what they can deliver on, right?
That's right. So there are some companies that are still blowing out the high expectations, but you got to really be delivering an amazing quarter to have a good stock price reaction, it would seem, this earnings season so far.
Apple and Facebook were impressive. Even Google was impressive. And I mean, I know that, quarter over quarter, if you look at March of last year, we were coming off of lower numbers for some of these, for some of these companies. But even with the lower numbers, they were still doing okay.
Yeah.
Even with that, these numbers are still pretty impressive. That these are trillion or multi-trillion-dollar companies that are putting up the kind of growth that you'd expect from growth companies.
Yeah.
That are,
Were there any companies before 2020 that had crossed the trillion mark?
I don't believe so.
That all happened over the past year?
I think
Right.
so. Yeah.
That's right.
And now look at this. So Apple's over 2 trillion. Microsoft is right at 2. Amazon, Google, and then Facebook. Yeah, like it's crazy.
Yep.
It's crazy. It's amazing what happens when you put $5 trillion into the economy in like a few months.
And even these companies coming off of a pandemic, Apple's doing a $90 billion buyback. They're increasing their dividend. Google's doing a $50 billion buyback. I mean, these companies are just cash cows.
Yeah.
And they're returning value to shareholders even after the crap that we went through in 2020. I don't know. I'm impressed.
Facebook is actually up massive after hours, which is a good segue into our screw Facebook portion of this show. So I tweeted this out. Was this yesterday? Yeah. So I'll just read it for everybody that's listening on the podcast, since that seems to be growing pretty quickly right now. In case you needed another reason to hashtag delete Facebook and Instagram, She Talks Finance, so Nikki over here, submitted verification info to Instagram because she was having all these issues with impersonators like all of us have been having recently. But she did that thinking it would actually help stop the impersonators from scamming her followers. Instead, Instagram took down her real profile, and as of right now, let the impersonations accounts keep sending direct messages. Literally 2 minutes before we started the show, one of my buddies texted me a screenshot and said that one of her impersonators just contacted him. It's actually the same fucking account that we've reported to Facebook and Instagram probably a couple hundred times, and for whatever reason, they leave this account up. It's an obvious scam account. It copied all of her stuff, has bot followers, and sends the same scam DMs over and over and over
to my followers.
Yeah. So what's the rest of the story? I'll let you take this.
I still have yet to get access to my Instagram account.
So they took your account down.
They took my account down. I'm completely locked out. I had an Instagram live scheduled. That's like my lifeline for connecting with my audience, right? And now the impersonator account is up and thriving and messaging, having full control to message all of my followers. The impersonator account basically reported my real account as being an impersonator of them. So it's like this freaking circle of hell that's happening right now. And Instagram completely screwed me by locking me, the real She Talks Finance, out of my account and leaving this, I want to say curse words right now.
You can cuss. This is an adult show. Yes.
Up to be able to continue to scam people.
Yeah.
It's ridiculous, and I don't understand how in the actual hell, with the billions and billions of dollars these companies have on their balance sheets, we can see it, they've got it, that they can't figure out a way to stop impersonators from creating similar accounts, similar usernames, similar posts, copying everything, getting the same amount of followers or more in a matter of a day. How can the algorithm not figure this shit out?
Yeah, it seems like it's just intentionally negligent at this point. Like we were talking before the show, Trav, you said you could probably spin up an algo in a day to figure this out, right?
In an hour. I could create a very crude set of rules that would filter out what these impersonators are doing. Forget machine learning, which Facebook has one of the best machine learning AI teams in the world as it is. But forget anything that complex. They could put one programmer on it, create a set of rules, and filter out 95% of what this is doing. Like, what's your account age? How quickly did you get your followers? You know,
what are the words
how much have
in
you
your
spent on
username?
Facebook ads? Do you have underscores at the end of your username? All these are factors that would increase the probability that it's an impersonator account. So the technical incompetence is stunning here, given what they claim to be, which is a tech company, right? With one of the best machine learning teams out there. So technical incompetence, unbelievable. They have the financial resources. I mean, the margins they just put up, their operating margins and operating income and cash flow they just generated in one quarter. They could hire hundreds of thousands of people to help with this, right? And it's just stunning what they're allowing to happen. And it's pushing people off the platform. It's hurting creators. It's hurting the people that help them build their platform.
Yeah.
So anyway, if you do know of anyone high up at Facebook or Instagram, we would love to talk to them. We would love to actually try to sit down and understand why they aren't, helping us here. This affects real people and real businesses.
Yeah. So Nikki, for the past year, for you guys that don't follow her on Instagram, has been really trying to help women in finance and really trying to help them build their investing skills and personal finance foundation. And you've been getting a lot of traction and connecting with great people. And you actually had a live scheduled with another woman,
female content creator,
that yesterday, right before they took your account down.
Yeah, and it's like that looks bad on me. Like, I don't want that. I don't want my followers getting spammy messages from some jerk that's trying to scam them for money. Like then they don't, I don't want any association with that at all.
Yeah.
And this is supposed to be a safe space for creators to feel good about the content that they're doing. We're trying to add value as creators on their platforms to their users.
Yeah.
Okay, so make our lives a little easier and make this shit to where we're not having to run away from the platform. Now you don't even use the platform anymore because of this same exact issue.
So all the privacy and security concerns of Facebook aside, which that is an hour-and-a-half conversation in and of itself, all of the terrible shit they do on that side aside, just this problem I've been dealing with. I was one of the first people to start getting impersonated several years ago. And I'm like, what is this? Why is this not happening to anybody else? Thankfully, I guess nowadays more people are aware of it, but they have not made a single fucking improvement in the past 3 or 4 years that we've been dealing with this. And it's just mind blowing how incompetent the situation really is. And so, yeah, I think it was a few months ago, I posted something on Facebook. I'm like, this Facebook account is no longer active. I don't give a shit. Facebook doesn't care. They're just letting these scammers run wild. And then after they took your Instagram account down, I changed everything to this is no longer active. I'm done with Facebook, So I've been done mentally with Facebook for a long time, but this was kind of like the final nail in the coffin. Like they're intentionally negligent at this point.
Go ahead.
Well, what's tricky about this is for a lot of creators, we don't have the option of just saying screw Facebook or Instagram and not being on the platform. Because as much as we want a decentralized, blockchain-based, social media platform, they don't really have the scale yet. They don't have the technical capabilities or the scale or the user base yet for it to make sense to build on those platforms yet.
Yeah.
So I'd love to see those come along, and I think blockchain could play a very big role in helping verify profiles. I mean, why do we have to worry about going through Twitter and Instagram and these arbitrary review processes for getting verified?
Yeah.
That's one of the things.
And they don't even approve it. I've done it many times. They don't approve me.
It's like, it's a joke. So, the blockchain, I think, will play a big role in the near future, hopefully, but we're not there yet. And so between now and then, we need these companies that have all these massive platforms and profitable balance sheets and income statements to be able to help us.
Yeah. And so this is where, I've done enough bitching for today, but this is where I want to propose a solution. I know there are some startups out there that are trying to do the decentralized YouTube, the decentralized social network, unfortunately the SEC is going after library for some egregious reason. I want to help support entrepreneurs that are building the decentralized platforms, and it's not going to be easy because Facebook and Instagram and YouTube do have the network effect. But I'm bullish on decentralized things. Like Minds is one that's been working for a while. There's a few others, and again, they don't have the user base yet. But the more that we can get the word out, and the more people that wake up to the fact that Facebook doesn't give a shit about your privacy and security. Instagram doesn't care about scammers running wild. The more people that wake up to that, the more it is going to push people to the better platforms and the decentralized and, blockchain-based verifiable identity, right? That's really what we need. So
agreed.
If you're working on something out there, let me know. We've got capital, we've got investors, we've got talent.
And if you've got an Instagram connection, hook a girl up. I need to talk to somebody.
Yeah, man.
That's infuriating too, that you can't talk to a human being that's not like a drone worker in some low-cost country.
Yeah.
Yeah,
and it's funny because the form that you're supposed to fill out to try to get your account back, you're supposed to be able to put in your Instagram URL. I couldn't even put it in because it said user not found.
Yeah.
So I'm completely deleted.
Yeah.
And I can't even request it. It's just
the technical incompetence.
All they had to do was look at the fact that on that account, we've spent tens of thousands of dollars in ad revenue. You would think that would be one line of code they could add to say, oh, don't delete that if they've spent a lot of money through that account. Doesn't make any sense.
No.
Anyway, all right, moving on to something a little bit less heavy.
Off our soapbox.
Yeah.
Sorry, guys. We just had that in.
I mean, I think that's huge, though. We don't want any of you guys to get scammed. And
true.
It was frustrating. One last thing, and then we can move on. I got done with Instagram, and it was like every couple of weeks I would log in and I would have dozens and dozens of messages of, did I just send you $5,000? Is this you? Is this you? Like, it's just totally out of control and obnoxious. So
Yep.
I'm done with it.
Yep.
Moving on. Let's talk about the Doge father, guys. So Elon and SNL are doing a skit where he's basically, for some reason, I don't know if he's just having fun with this or what, but Elon is, taking Doge to the moon and introducing it to people, through talk shows and, Saturday Night Live. Like, what do you guys think's going
I
on?
wonder if he'll mention it on SNL, like if he'll actually talk about Doge, or maybe he'll wear a Doge t-shirt.
Yeah, he's absolutely gonna.
Did you read the title? Read the title. You read it, right?
Elon Musk dubs himself the Doge father in SNL promo tweet, prompting. Man, I can't speak today.
Prompting real people to invest actual money in joke crypto.
Yeah. Is this his way of like being spiteful against the SEC, or like what's happening here?
That's a great
I
question.
mean, between this
Techno King
and
and
selling
Yeah.
the 100 million or making the 100 million to shore up the quarter. I don't know.
And
Lots
now we've got even Mark Cuban going on the Ellen show talking about Doge. Like,
Yeah, I
what
saw
it is to me, it's an interesting experiment, and it's an interesting way to bring non-crypto people into crypto.
Yeah.
That's what Doge was since 2014 or 15, whenever it started. It was a way for people on forums and Reddit and whatever to learn what crypto was, and then they go, oh, okay, I get it. This is a clone. It's not really real. Let me jump into the real stuff. But now Doge is actually swinging big capital. So it's pretty interesting.
Yeah, and I think, Elon loves memes. I think that's just a big part of it. He just loves trolling and memes in general. And so, like, I don't think he actually has a true belief in Doge becoming the... I mean, he has said some weird things, though, like that Doge could become the currency of Mars or whatever. So I don't know if he actually believes that. I think, to me, he's probably just trolling. But,
Do you believe that?
No.
Do you think that that's possible?
I think it's very likely that if we could establish a civilization on Mars and have it have its own independent set of rules or governance, that crypto will play a part in the monetary system there for sure. I don't know about Doge specifically, but I think crypto would play a large part in that type of civilization.
Yeah, that makes sense, right? I mean, obviously, I think on planet Earth, we're going to see more adoption first, and then whatever that leads to, we'll flush out fiat and then take Doge literally to the moon and Mars.
It's interesting to think about the rules that we will import to Mars, right? And what countries will be able to take ownership of what and be able to implement their policies from back on Earth. I would actually like to see more of a fresh start on Mars, where the early pioneers, so to speak, can actually set some of those rules and set some of the governance, and that we don't have these weird country boundaries that define what happens on Mars.
Yeah.
I don't know. But that could also lead to some really weird problems itself. So
Yeah, we got Mike said, Doge was my most profitable trade ever.
Hey,
LOL.
there we go.
Congrats. I mean, look, it's a tradable asset. I personally didn't trade it. Travis and Rocky both made a lot of money. I know a lot of people in our community made a lot of money on this. The chart is beautiful. Nikki, you called the breakout to the hour almost a couple of weeks ago.
I wonder if this will be a bull trap or if it'll be something else at this point.
You guys want to make a call?
I wouldn't
make
be
a call.
surprised if there's another leg,
Yeah.
but I'm not buying it up here.
Yeah.
That's just look, I have JOMO, joy of missing out. When things are too hot, when the Ellen show is talking about it, when SNL is talking about it, that could drive another leg. And I could be way too bearish on this, but as an investor and a disciplined trader, I stay away from meme stuff that's up thousands of percentage points. Right?
Yeah. I think that's generally a good rule.
Yeah.
Yeah.
All right. We've got, what was this tweet? Dave Portnoy. I don't really care what he has to say about Bitcoin, honestly. Who put this in the show notes?
That's not about that.
No, I know.
This is about
Bitcoin.
Elon.
Beefing with Elon.
Yeah.
Yeah.
Well,
and
okay.
Elon's response.
Yeah,
Or
so-
should we start from the beginning?
A lot of people. Okay, let's back up, guys. I am a full White Claw in right now.
Okay,
So I'm feeling loose. This isn't quite a whiskey and wisdom, but we got so fired up about Facebook that I was
He
like,
had
you know
to
what?
have a drink.
I had to have a drink.
I heard they have double the strength White Claws now.
Oh, for real?
Yeah, I forget what they're called. Yeah,
like 10%?
Yeah, 10% White Claws. I'm not sure if they're selling them yet, but they announced them not too long ago. So, you know,
Yeah.
next time we get on a tilt, we may have to find those double strength White Claws.
Let's do it.
White Claw's trash.
Yeah. I
Yeah.
mean, it's it's good boat
Truly.
boat drinks. Truly's are
Truly's
better
good.
tasting. Yeah.
Truly's good.
All right, so yeah, let's back up. Let's talk about what happened. So Maxie's got triggered over this. Elon sold $250 million worth of Bitcoin, and his excuse was he was like testing liquidity. And I don't know. I really don't care, to be honest with you.
Yeah.
Let him trade in and out of it. I don't care if Elon dumps every single Satoshi he has. That's not going to change the direction of where Bitcoin's headed. And all these people on crypto Twitter, they get triggered like, oh, he's not a real hodler. I don't know. What do you guys have
I'm
to
not
say?
triggered by it, but I do wish that he would stop bullshitting us about why he did it.
Okay, there you go.
Because
Good point, good point.
testing liquidity by
Come
selling 20% of your position or 15% of your position is silly.
Yeah.
You know Bitcoin's liquid. You bought $1.5 billion of it when you started. You know it's liquid.
He's
Why
like,
do
I
you
can
need
make
to-
a cool couple $100 million.
Just admit
Exactly.
it.
Yeah.
Just admit you did it to pump up the net income for your Q1. I mean, like, don't lie to us.
Yeah.
It's fine if you want to sell it, whatever, but
The optics of this whole quarter for Tesla definitely may not be a good look for, depending on how you look at it. I mean, between the Bitcoin selling, which helped improve their quarter,
100 million profit.
and then between the regulatory credits that they sell that helped them become profitable in the quarter, between those two things, and if you actually kind of back out what really went on in the quarter minus those two things, I don't know, it's not very much.
The business
a good look.
the business was unprofitable if you exclude the Bitcoin profits and the regulatory credits.
I
can
think
see why he
Elon.
sold.
I think Elon is in our community. I think he's
advice?
like, I really don't want to be doing this Tesla business. I just want to trade with you guys. I think that's what's happening.
Come forth, Techno King. Show yourself.
Yeah, wasn't it like China sales are basically propping up their growth at this point, or is
China sales are a big part of the Model 3 growth. I'm not sure. I'm actually not sure off the top of my head what their growth rate looks like ex-China, but they may still be growing ex-China, but China has been a big part of the growth story. And there has been some rumblings out of China that there's some consumer concerns over the quality of the car, over the brakes. There was like some bad headlines in some of the big Chinese papers about the Tesla cars. So
yeah?
if that starts to go against them, that could be bad for Tesla. We'll have to see how that plays out. But, you know, hopefully they can fix that and China will become a good market for them. But
So the Bitcoin maximalists are mad that he's got paper hands?
Yeah.
Is that what it is?
Yeah.
They didn't want him to sell any of his crypto.
I guess not.
Okay.
Yeah.
Well, you know, I don't know.
Yeah, I mean, people are always looking for a messiah, right? Like people, like Bitcoin maxis nowadays are looking at Michael Saylor as a messiah. Like, and the guy is super smart, and I give him so much credit for having like the most skin in the game at this point.
Yeah.
But we have to stop this idea of worshiping people, either celebrities or people that have the same investments as you, or politicians that have the same beliefs as you. Like it just feels so weird to me in the 2020s that most people still worship other people so much and follow and get mad when people diverge from what they think they should do. It's very strange. And like, yeah, as we talk about, like the best investors in the world don't think that way. They are their own lone wolf. They look at what other people are doing and they weigh others' opinions. But these people that just latch on to other people, and like if they go away that they don't agree with, all of a sudden they go from being their disciple to their enemy. It's very strange.
Well, I mean, for the people that are angry, they can take solace in the fact that Tesla still has 1.3 billion of crypto on the balance sheet.
Yeah.
So in the grand scheme of things, you know, it wasn't a huge percentage.
Yeah. And Elon snuck in there. He goes, I didn't sell any of my own Bitcoin. So I don't know if he's publicly said how much he personally bought, but he's like, I didn't sell any of my own Bitcoin.
Yeah, but that's the thing. He hasn't talked about that. We don't know. We don't know how much he owns.
Know.
Yeah,
but
exactly.
Interesting statements, right? And yeah, it was sort of weird. Oh, to test liquidity. Like, come on, man.
Yeah.
But I think people were shocked because it was rather quick. Like, they were like talking up how they put $1.5 billion on the balance sheet, and we're all like, pumping it up. And then within the same quarter, they sold a pretty significant part of the stake. So it felt a little bit like a rug pull for some people. I get that, but you're right. You shouldn't be using them as your basis for your Bitcoin investment anyway. So it's like that's the kind of stuff that I would feel like is icing on the cake. And
Fair point.
yeah, we've talked about that a lot, right? Like, there's lots of reasons to own Bitcoin and why Bitcoin is in the kind of trend that it's in, and no one of those is the primary reason.
Exactly. Yep. All right. Moving on, we've actually got a few other headlines that I thought were pretty interesting this week. This one is no surprise, but I figured I'd bring it up anyway. SEC delays VanEck Bitcoin ETF decision to June at the earliest. I know we were talking about this. I think it's going to be next year.
My clock is ticking.
Your clock is ticking. What did we bet?
I don't know.
Did we make a bet?
I don't know if we did.
Your new car.
No.
Trav just bought a Lambo. Everybody. No, I'm just kidding.
I didn't.
He bought something cool that I don't know if he wants to say. Hey.
Hey.
Keep it a secret.
Hey.
Mysterious.
I know. I hadn't gotten a new car in 10 years. I was driving a beater. Figured it was time to.
That's how you know you're a good investor when you're like,
usually-
oh no, I'm going to save all my capital for the
It's
markets.
the wealthiest people that drive the beaters.
Yeah, I don't live a very lavish lifestyle, but it's nice to get something new every so often.
Absolutely.
Every decade.
You did.
Yeah.
All right. So anyway, so if the SEC doesn't approve an ETF this year, I get your car.
No. We'll bet some Doge.
Okay.
I said spring of 2022.
Okay. I think that's fair.
made a bet.
Yeah, we did. We didn't.
I said first quarter of next year, I think.
Okay,
So
yeah.
around the same time as
I
you.
don't know. Roll back the tape. I don't know.
Roll
Yeah.
back the tape. Yeah, I still think it's possible by the end of the year, but it doesn't give Gensler and Co. a very long window.
Yeah.
For sure.
Yeah, I would be very surprised if they approved it this year. But
Yeah.
hey, push it out as far as you want. It's not going to stop the progress.
Yeah.
But it will give that capital boost for sure.
Yeah.
So, hey, how about this? Once Bitcoin goes into a bear market, then they should approve it.
Yeah.
That'd be great.
That would actually be best case scenario. If they did it now, yeah, it could drive capital, but,
Maybe they're
that would create a
afraid,
blow off top, I think.
Yeah, of all the investors piling in at the top or something.
Yep.
Protecting investors.
Exactly.
I don't know.
It's almost certainly going to create at least a one-day pretty sizable positive move, I would think.
Oh, yeah. People are going to, ape into it.
Wonder if there'll be any insider leaks on that. There are enough people involved in the SEC office and at the fund companies that have applied for these ETFs that you could see a little bit of leakage. If you, I don't know. I mean, it'll be interesting to see.
Yeah.
If there's like Bitcoin's up like 4% the day before they announce it or something, it'll be like, who knew?
Yep.
Yeah.
Somebody did. Next up, fintech app Wealthfront will offer direct crypto investing later this year. So I think this is huge because, Nikki, in your
This is
world
huge,
of
actually.
financial planning, a lot of people over the past several years have been pushing robo-advisors, right? Like, don't speculate in the stock market. Just buy low index fund ETFs and do that through a robo-advisor. And
Stocks and bonds.
if Wealthfront starts offering that, that's going to open up that whole RIA investment advisor world, so that is almost like part of the puzzle of the whole ETF thing, right? Because the goal there is to get all the investment advisors to get into the crypto space. This is kind of maybe the foothills of the Himalayas that are coming our way.
Yeah, and it looks like they're being cautious. They're saying as much as 20%. So they're trying to put a cap on the allocation, it sounds like,
Yeah.
to where, people can't be too heavily invested in crypto, which is high risk. So that's interesting. I think that a lot of people are going to like this because certain robo-advisors, your capabilities are a bit limited. Like some will only invest you in stocks and bonds and that's it. And like,
Yeah.
okay, well, what if I want some gold? What if I want some crypto? What if I want some REITs or, whatever. So I think that this is going to be a good offering for people and hopefully it's not abused and it's used properly for risk tolerance.
Yeah. Yeah, there should be some kind of middle ground between Robinhood, which most people are going to lose money over there, for several reasons. And Wealthfront and, index fund, passive investing, there needs to be a solid middle ground. And maybe this could be it. If they offer some active options, but they don't want people just going super wild.
Well, look, investors are starting to wake up to the fact of being more tactical than just a broad S&P index fund.
Yeah.
That's kind of been preached all over the place. It's just buy a low-cost S&P 500 index fund. You're good to go. And it's like, well, you can get a little more tactical than just that. There's so much more to investing than just that.
Yeah.
You've got emerging markets, international developed markets. You've got alternatives. You've got metals, or other types of commodities. I mean, there's just so much that you can do with a portfolio that I think investors are starting to kind of wake up to that fact.
What do you think, Trev?
100%. I think you nailed it. I don't have a whole lot to add.
Okay.
To be honest.
Good show, guys. We'll see you next time.
Sometimes I nail it. I don't know.
You do. Yeah.
I agree.
Here we go. So circling back to Mark Cuban touts Dogecoin on Ellen, a whole lot better than a lottery ticket. Okay, so I can see both sides of the coming arguments. One being, hey, it's good to wake probably the demo of Ellen is what? Middle-aged women, I think.
Yes. Yep.
If I'm wrong, somebody in chat tell me, but that's my guess. It's good to have somebody that they see on Shark Tank as a credible figure saying cryptocurrencies, even a joke coin, is still valuable. I think there is something really beautiful and good about that, but I hope I didn't listen to this or know exactly what he said, but he's got to be careful. Because you don't want to turn a bunch of moms into degenerate gamblers.
I tweeted about this, actually.
Oh, you did?
I don't know if you saw my tweet about this.
Let me see.
But I kind of made a cheeky remark.
Okay. What do you think?
I totally agree with what you're saying. On the flip side, okay, if only celebrities could be on Ellen trying to promote, instead of a higher risk investment like Dogecoin, instead of that, and promoting things like index fund investing, even though or any kind of stock market or whatever investing, plus let's learn how to do our taxes, let's learn what taxes are and how to actually make sense of them.
Sorry, I fell asleep when you said taxes.
Why can't why it's always got to be? I know that taxes and lower risk investing is not sexy, I'm aware, okay, but it's important.
Yeah.
And it's like, if only celebrities could promote that kind of shit instead of this. It's like all of those.
Can you see Kim Kardashian on there? Okay, guys, now we're going to talk about qualified investment plans and what is your adjusted gross income? And
look, this is the problem with finance, right? And investing is that people want the sexy stuff. They want the Dogecoin and the high flyers and the GMEs, right? But really what we should be promoting is the stuff that's really going to help people build their financial foundation.
Yeah. Yeah, because if you mess that up, you can make $1 million in Doge or $10 million and then end up owing money to the IRS after all of your gains if you screw it up. So
I'm just imagining Mark Cuban going out there and being like, hey guys, guess what we're going to talk about today? We're going to talk about understanding your taxes.
Yeah. And then Ellen's going to be like, all right,
and
show
then everyone's
over.
like, no.
Yeah.
No, I get it.
It is rather strange and risky that Ellen's allowing Cuban to sort of present cryptocurrency with Dogecoin being the entry point to her audience.
Yeah.
Her audience is probably so unaware of on average what's going on in crypto and what it's all about, and then for Dogecoin to be the entry point, although I don't know, maybe that is the right entry point. Maybe the right entry point for some folks is something kind of fun and light, and it's just a joke and I'm willing to lose money, and if it makes money, great. If not, it's fun.
Yeah. I don't know. There's definitely something to that. And okay, so look, I was just scanning through this article. The talk show averages 1.5 million viewers, many of whom are women below the age of 54. And then Cuban said, cryptocurrency is just an asset to invest in. Bitcoin is kind of like a digital version of gold. Ethereum is a digital version of a currency. Okay, I can see why he's like keeping it that simple. And then you got Dogecoin, which is just fun. But the weird part about it is it went from being a cryptocurrency joke to now becoming something that's becoming a digital currency. So I think demonstrating that point that like you can create something that has value as a monetary system out of nothing, it actually works. And most people, they just think that dollars are money, right? And like people in mass are waking up to the fact that that's not true. So I think that's cool. But yeah, hopefully he said some like disclosure-y type stuff on there.
Yeah, or educated them.
Like this, we are not financial advisors. Please don't blindly follow anything that we do because we are not financial advisors.
Yeah, crypto and stocks are risky.
Yes.
You could lose money.
Absolutely. But yeah, I don't know. I think it's cool just to pull those.
What chain was Dogecoin cloned from? I forget.
Bitcoin.
Was it Bitcoin?
Yeah.
Okay.
I think. If I'm wrong, somebody tell me, but I'm pretty sure.
So Dogecoin was cloned from the Bitcoin or forked from Bitcoin. That would seem to me that if it got big enough and popular enough, it might have some scaling issues. It might have some transaction processing throughput issues.
Yeah, listen, any project that doesn't have a core development team isn't going to be able to compete over time, right?
So that would be my criticism to Cuban here then.
Yeah.
You're saying that Dogecoin is kind of becoming an alternative transaction currency, but if it gets big enough, it's going to have some real scaling issues.
For sure. And that's why it shouldn't get too big, I think. I don't know. You guys, let me know why I'm right, why I'm wrong. I don't know. Michael said, let them buy Doge. Makes no difference. When they sell during capitulation, that money will make its way to BTC and pump our bags. Doge for tipping. Dogecoin is still a joke, just a better joke than many other things. Litecoin. Yeah.
I could see Dogecoin. I mean, if before it runs into scaling problems, if it does become sort of a Venmo-like, tipping apparatus among the TikTok generation, there could be something there. I mean, you could have a fundamental case for an increase in Dogecoin's price over time. I mean, I know it doesn't have the same supply dynamics as Bitcoin. It's not as favorable in terms of supply dynamics, but
aren't there more supply constantly being created?
But the inflation rate is supposed to come down on Dogecoin over time, so it's not horrible, and it's not like you have the XRP Foundation sitting there willing to sell a bunch more. So I don't know. Maybe there is a possibility if this becomes like a tipping use case that there is some longer term fundamental value to Dogecoin.
Yeah, I mean, look, the real volume over the past 24 hours is $6.5 billion.
That's insanity.
Right?
That's a lot of bones.
That's a lot of bones, so at a 40 billion market cap, like this is no longer small enough to just laugh off as a joke or as something that isn't real.
Yeah.
This is the market cap of a top S&P company.
Yeah. But look, market caps in crypto are a very fickle thing.
That is true.
They come and go like feathers. Like, look, I could create a coin called Chris Dunn coin. I could mint 1 million of them. You could buy one for $100, and I could say I have $100 million market cap, right?
Yep.
The problem is what's the liquidity, right?
Yep.
Like, if you sell that back to me for zero, then it's worth zero, right? So market cap is a very, very fickle thing. Real trading volume on exchanges that you can actually trust their trading volume and the depth of the order books is what I really look at, right? Like how much capital are people actually putting in and out of the market on a daily basis?
Yeah.
That to me is a pretty real measure of value.
So is the lesson learned from Bitcoin and Dogecoin and all of these other cryptocurrencies that anything's possible to be valuable?
Yeah.
Like anything's possible.
Anything's
if
possible.
Dogecoin can become worth $40 billion,
Yeah.
Market cap, and it's a meme coin,
Yep.
the people put the value there.
Yeah.
So the people can put the value in anything.
That's why NFTs have gone crazy, right? And that's why so many people are triggered by NFTs, because if you don't see value in digital art or one of the many other use cases, then you're like, no, this shouldn't have value. But if enough people see value in something, even if you think it's a scam, it actually does have value independent of your opinion.
Yeah.
Oh, by the way, Doge is a fork of Litecoin.
Oh, interesting.
My
Okay.
bad.
And Litecoin, was Litecoin a fork of Bitcoin? I can't remember now. I know there's some different properties with Litecoin, but I couldn't remember if it was a fork of Bitcoin eventually.
Listen, the real Bitcoin
Or initially.
is BSV. No, I'm just kidding. Obviously.
I'll have to look that up. I want to look into that a little more, but
Look, even stuff like BSV is still trading hundreds of millions of dollars a day. So like, there's so much money chasing stuff, right? Like that's why things have gone up. If we look at like just the U.S. tradable assets, 1,000% over the past year on average, right? Like so much money coming into the space, and that's why I'm bullish on competing things that offer unique use cases. For example, the one that all governments hate, Monero. This is another one that I had a big trade on this year.
That's the privacy coin, right?
Yeah.
Okay.
So this one is unique in that you truly can't track transactions. Like Bitcoin is not transparent, or it's not anonymous at all. It's fully transparent. Ethereum, even more so, you could argue. You've got like Tornado Cash and stuff like that, but you've got to be real careful with Bitcoin and Ethereum and a lot of other cryptos if you're trying to keep your transactions private, where Monero and you could even say Zcash and Dash and a few others have very strong use cases for obfuscating transaction history, which again, governments don't like. But if you're a privacy seeking individual and you obey the law, I don't see any personal issue with that.
So then is there more risk of Monero being banned?
Yeah, I mean,
So to
governments
speak.
don't like it. It's been delisted certain places. And so even though I took this as a trade and I'm up quite a bit on it, I still look at it as a higher risk thing, because
Of
the
that.
governments could go to exchanges and be like, delist this or we're going to throw you in jail.
Right.
So that is a big risk. But I think people should actually put more of an effort into making Bitcoin and Ethereum both more private. I mean, yeah, are criminals going to use it? Yeah. Do they use cash? Yeah. That doesn't make it an evil product.
Right.
All right. Moving on. Let's talk about the fun world of capital gains taxes. I've gotten so many questions on this.
Really?
Yeah.
I'm surprised.
Well, just about my opinion. Like, Chris, what are you going to do
Oh,
if
okay.
capital rates go double or whatever? And I'm like, I don't know. Let me consult my tax expert over here. What are we doing, Nikki, if tax rates double?
Controlling our income and hodling.
Yes.
No, yeah, this is a big debate. The market actually sold off, not by much. I think it was last week.
Yeah.
Because of the news that came out about this, which it was funny because we all already knew about this. This is like such old news that Biden is trying to double the top capital gains rate. The thing is, it's for wealthier people, individuals making over $1 million in income. So that's not going to be most people.
What do you know? What percentage of people make over $1 million net in the U.S.?
I don't know the exact amount.
If you had to guess,
I don't know.
Maybe we could
10%.
look it up.
I don't know. Trav maybe can look it up. I don't know. I don't know the exact percentage, but I mean, probably a good amount of. I would say probably a good amount, more than we would expect.
yeah.
Make over $1 million.
Let's say maybe. Let's say 1 million people. All right, so let's say 1 million people are in that bracket.
Okay. So essentially, people are losing their minds over this because they are concerned that the capital gains tax rate is going to be the highest it's been really in our history. I mean, I think we've seen capital gains rates as high as like 80%, like in the 1917 or something like that, or
Yeah.
before the 1920s. But since the Great Depression, this is going to be the highest hike since. So it's a big deal, especially if you live in high tax states and you make a lot of income. You could be paying, half of your money could end up gone.
Yeah.
And I would say that's a big number, and I would also say that this could have an effect on investment going forward. I guess the argument is a lot of people are concerned that the wealthy people that are taking their cash and they're reinvesting it into other, startups or venture capital funds or whatever it is, or they're actually taking gains. They're actually selling their assets to take gains because they have, a low capital gains tax rate. They have a reason and a motivation to take the gain, right?
Yeah.
But now what we might see is we may see less investment. We may see people hodl, a lot of hodling. Actually have a statistic, and for those that don't know what hodl is, it's hold on for dear life. Basically just means you're gonna hold, you're like never gonna sell. And there's a statistic that says, this is from the Congressional Budget Office, and they found that for each 1% increase in the capital gains tax rate, there is a 1.2% reduction in realizations. So they do see a relation between increasing capital gains and reduction in realizations of gains.
So basically, the higher the taxes, there's a exponential kind of decrease in
realizations,
in
profits.
profits.
Yeah.
Okay.
In selling. So
Yeah.
I guess to extrapolate from that, we can expect if this passes, a lot of people are just going to hold, or they're going to control their income to be under that million every year.
Yeah. What are the two sides of the coin? One of them that I've heard recently is, okay, if capital gains go up, investors and entrepreneurs aren't going to stop working hard and trying to find investments. But then on the other side, what's the argument? That it's going to disincentivize investment, so people are going to pull back. I don't know. What do you make of it, Trav?
It's hard to know where that nets out. I mean, I think there's a lot of places where it seems to be proven that people will not. I mean, and in the U.S.'s past, it seems to be proven that higher capital gains taxes in themselves do not dissuade investment generally. Now, there's probably some investments it would, and probably some weird behaviors it would cause among some households.
Yeah.
But that argument seems to be shot down when you look at data from other time periods or other countries. But I think the new ways that they're talking about structuring some of these capital gains taxes, where they have different tiers for how long you've held stocks, or for different assets, that could create some really odd behavior that does have people end up like doing weird things like transferring stocks to their kids instead of selling them, right? Or trying to like essentially hold for longer periods with weird, and that can create some weird behaviors. That can create some like weird ownership structures within the stocks themselves. We forget these are ownership shares in businesses, and so like companies, boards, you have votes and stuff like that. And so if you have people using all these weird legal structures to try to avoid selling under tax situations, you're going to have some perverse behaviors for sure.
Yeah. I mean, that's already happened in Bitcoin, where it's like, don't sell your Bitcoin, lend it out, and then
Exactly. Yeah, I don't know if I was very clear on all that, but basically you're going to have some perverse behaviors that come out of like weird tax changes that aren't, especially the less simple the capital gains taxes are, the more perverse behaviors you're going to get. Just like we see with regular income taxes.
Yeah.
People do all kinds of weird, funky stuff with real estate, with 1031 exchanges, deductions, right? People try to claim their cat as a dependent, you see weird stuff.
Speaking of weird stuff, let's look at Chamath's tweet.
And by the way, just real quick,
go
it
ahead.
said, I looked up the IRS has some data that shows less than half of 1% of households end up with an adjusted gross income over $1 million.
Oh, okay. I also found here on Quora, it said that in 2018, there was about 500,000 tax returns filed that grossed over $1 million.
Okay.
Yeah.
So I don't.
Also, you got to remember these people have ways to get their income lower.
Oh, there's
Sure,
a lot more
sure, sure.
millionaires than that. Yeah, there's a lot more
probably
millionaires than that
make
for sure.
a lot more
Yeah.
money than that.
Edward asked, if you earn more than $1 million a year, can you really complain about paying 50% tax? Can you even spend that much money in a year? Yes.
Oh, I could spend it.
Oh yeah. It's very easy to spend $500,000 or $1 million in a year.
Lifestyle creep.
Yep.
Yeah.
And yes, I do care. Like if I make 1 million or 10 million, I don't care what the number is. I don't want to give half away to a government that I feel is ineffective at spending those dollars.
That's the question.
That's the dilemma,
is,
right?
Yeah.
What is the government going to do with the money that they generate from these tax changes? Are they going to do it well? Are they going to really allocate it the right way?
Yeah.
And is the middle class truly going to benefit? This is a pretty big tax overhaul on many different levels that Biden is proposing, and it's really gonna I mean, I don't know. We'll see what it does. We'll see if it even gets passed. But I do think that it's going to change a lot of things.
I do think there's going to be some pretty significant challenges to this. Even some of the moderate Democrats, I think, have had some pushback on some of the elements of the proposed plans. So we'll have to see like how far they can get to the goal line with some of this stuff. But it's funny because, right, they're trying to like, they're so loose with the purse strings when it comes to the fiscal spending plans, but then they want to take that right away by increasing taxes. It's sort of like you're kind of like offsetting it in terms of an economic impact. But
Yeah.
Well, it looks like Chamath has the answer.
Okay,
Here's the
yeah.
answer. So Chamath, I cannot ever pronounce his last name. Chamath. No, his last name. Can anybody say that?
Palapatilla.
Palapatilla. Oh, damn, that was good. Okay. Reacting to Biden's proposal, here is a modification. Tax rate indexed to holding period. If you hold for less than a year, 75%.
Go.
Woo!
Go.
1 to 2 years, 35%. 2 to 3 years, 25. On down, 10 years plus to 0. He says U.S. governments would maximize tax revenues where most selling occurs and incentivize long-term holders to keep it up. So this would basically de-incentivize liquid markets at all, I think. Like,
Yeah.
this would just crush the markets.
That's
Yeah.
the problem. There's a couple problems, like you just said. Liquidity. It's going to hurt liquidity in the markets. It's also going to create more complexity, right? In what is already complex between short-term, long-term cap gains. Options are treated differently than stocks, right? And then now you're going to have all these different tiers. It's just complexity
Yeah,
is
that
just
sounds like a freaking nightmare.
great for tax
No,
accountants,
thank
bad
you.
for the rest of us.
yeah.
I get what he's trying to do here. He's trying to incentivize longer term holding, but that's a whole separate issue from what should capital gains tax rates be and what should our tax policies be.
It's almost like he took the opportunity zone tier system that they have with reducing the taxation the longer you hold it.
Yeah.
That's kind of what he did there, I think. But it doesn't make any sense here.
It opens an interesting idea, but yeah, it would just destroy markets.
And, you know, a lot of the smaller retail traders are short-term traders. I mean, they would basically crush them.
Yeah.
They wouldn't do it anymore.
And the average person, they don't understand the value that traders actually bring to the markets with liquidity. I still even, I don't know, Trav, can you sell me on why we need short-term traders? Sell me this pin, you know, like
Yeah.
what would you say to an average investor person? Like, here's why we need not day traders or high frequency stuff, but here's why we need active traders in the market.
Well, obviously liquidity, but also
But what does that mean? Like, if you say the word liquidity
Yeah.
to a non-market person, they're going to go, what? Liquid what? You want some water? Like,
that there's willing buyers and sellers at any given time if you want to transact in a stock or cryptocurrency. And the reason that's helpful is because, you know, price discovery helps with actually being able to transact trades when you need to without having to take a penalty. And frankly, active traders actually allow, you know, fundamental investors to get alpha as well. If they're willing to trade based on short-term information and I'm able to take a longer-term outlook, they're going to offer me an opportunity to make money off of that. You know, they're willing to sell me something at a price that I think is undervalued, and they're willing to do it because they're in a short-term trade with a short gain, right? So there's some element there that is selfishness on my part as a
That's very
long-term
true.
investor that I think having more liquidity and more short-term reactions, underreactions and overreactions to news actually benefits me as a fundamental investor.
well, now I'm not sold. Who cares about your profits?
But I mean, but
no, it makes sense. Like,
there
just
are downsides though too.
Yeah.
Because it creates weird short-term incentives for company managers, for insiders to dump stock and do weird things, for insider trading, for, you know, all sorts of bad behaviors. And
yeah, talking about something that I think is weird. I don't know. What do you guys think about quarterly earnings? Like, is that necessary or is it too short term?
I actually think it's a pretty good cadence because there are a lot of overseas markets in Europe where we only get half-year reports from companies. So a lot of European companies only report the results every half year. And frankly, you know, there's a lot of information that we'd want to have to verify things, to have insights into companies that 6 months feels like, you know, maybe too wide of a time frame. I think
You'd have really big gaps
Yeah.
when earnings can't come out. I
Big
would
stock
think.
moves,
And then-
yeah.
Yeah.
So a lot of gaps and gap ups and gap downs. Now again, that actually arguably could be good for fundamental based investors who can get an edge in between those earnings events. But you know, it also creates complexity. I don't know. I go back and forth on it. Sometimes quarterly earnings are just there's too much short-termism there that forces the companies into bad investment decisions.
Yeah.
Because they have to show certain numbers or certain trends every quarter rather than investing for the long term.
That's what I always wondered, right? Like, does it create that perverse incentive where it's like, okay, we're constantly stressed about that next earnings call? Like, I would hate to be the CEO of a publicly traded company and know that every 90 days I got to do a dog and pony show and like just tell everybody why everything's amazing and how like we're never we're never going down, we're only up, you know.
The cool thing though is that you've seen a lot of well-performing companies take a longer term view and the market has rewarded them for it. Like you look at Netflix or Amazon. You know, people would say, oh, they're not profitable, but it's because they're investing in growth investments and the market has rewarded them with a high valuation. And the CEO of Netflix, for instance, writes a long-term focused shareholder letter every quarter. So does Amazon. And they've laid out their strategy. They've told the market what they're going to do and how they're thinking about the long term, and they're willing to sacrifice short-term results for long term. And the market and shareholders have actually rewarded them for it with high valuation multiples. So I think they're still able to do the long-term vision, but they just have to want to do it. So there are all these companies that play the quarterly earnings game, like GE in the 90s, and you know they're trying to beat by a penny, and so that the headline says GE beats earnings or whatever. And what was actually happening behind the scenes is GE was playing a bunch of accounting games and taking a bunch of weird risks and trying to every quarter consistently beat earnings, and it ended up leading to a lot of problems at GE, and their stock got crushed eventually.
Well, good thing earnings don't matter anymore.
I was gonna say
Right.
yeah. I mean, as an investor, I like having those points every quarter where I can reevaluate as
Exactly.
well. I like getting that input of data to make sure I'm on the right track with my decisions and my positions.
Yeah.
So I like it.
So maybe you could do the best of both worlds. Like you said, like if you're a forward thinking company, you're like, look, we're going to play the quarterly game. We're going to tell you what's happening, but don't be surprised if next quarter's disappointing because we're thinking a year or
they
two
do
out.
that
Yeah.
all
Okay.
the time.
Yeah. Cool. All right. Let's talk about some other risks in the market. The biggest one that I think is kind of crazy right now is what's happening in India.
Agreed.
Man, this is sad.
I'm starting to think, tell me if I'm wrong, I'm starting to think the market might be ignoring some of these risks
I agree.
going on outside of the United States.
I agree.
Okay, good. Not alone.
So what has happened? So India had a first wave. They got up to right around 100,000 cases a day. They were doing great. Their numbers were back at kind of pre-wave levels. And then in the course of just a couple of weeks, they went from a couple thousand a day to over 300,000 a day. And if I were to guess, people like COVID deniers will sometimes be like, oh, they're over reporting cases. People that die, they died of diabetes. They call it a COVID case. I would say in India, it's the opposite problem where you have so many people living in faraway villages without good health care that the numbers are probably significantly higher than they're actually reporting, which is terrifying, and all the variants. And now they're saying how many people in their 20s and 30s are in hospitals and like dying. Like that to me is freaky. Like if that gets out, and what if there's we talked about a vaccine resistant strain, like.
So yeah, there are at least 2 known Indian variants. The problem that I see right now is that we don't have enough information to know if those variants are behind the high velocity of case increases, and or if those variants are going to be resistant to our existing vaccines. So there's, I believe it's like the B1.617 or something variant was the first Indian variant. And then the B1.617.2 or something, those are the ones that have been identified, but there's probably a bunch more already not identified. And the scary thing is we just don't know yet. Like I was trying to search for information this week on any info I could find about these Indian variants and what they've learned so far about the resistance of these variants, and there's just very little info.
Yeah.
The first draft paper came out yesterday or the day before, suggesting that one of the Covaxin, which I believe is an Ocugen, like some other smaller companies, vaccine that is used in India, might have some effectiveness, but we don't know about Pfizer, we don't know about Moderna, we don't know about AstraZeneca, we don't know about J&J, and yeah, there's just not enough that we know yet.
Yeah.
And we already do know that some of the Indian variants have shown up in a couple other countries and in California here in the US.
Yeah.
So, I'm not trying to say that this one is going to escape the existing vaccines, but what's scary is we just don't know.
Yeah.
We just don't know yet. And the market doesn't seem to be paying attention. And it seems like the market thinks this is an India isolated thing. But
I find it odd
What?
that the market is just completely blowing everything off.
Well, it's probably like what's happening here in Texas and Florida, where because we do have high vaccination rates now, people are like, okay, we're past it. So, I know like things almost feel back to normal here, but when you look around the world, no, we're not back to normal, and we could be really bad again soon. And so I was reading something crazy. Yesterday, I think it was yesterday or the day before, there was a flight from Delhi to somewhere else in Asia, and they tested everybody right before the flight. They quote unquote tested everybody, but apparently you can pay for negative tests. You can slip somebody a few rupees and get a negative test. When they landed wherever they were going, they did another test right at the airport, and there were 50 something positive cases on that plane that were quote unquote negative when they took off.
wow.
So the odds of whatever variants escaping India, I think, are really high.
Yeah, and it's weird too. The positivity rate on the testing is really high and staying high. It's like 20 to 25% of all COVID tests right now in a lot of these Indian areas are positive. So that's the kind of stuff that's like, a little bit scary. And it's it doesn't have to be super deadly to still have a major effect on markets and economies and putting countries back into shutdown if this variant is vaccine resistant. However, it's also worth mentioning, I should also mention that it could be the UK variant that is causing the spike here as well, because the UK variant is very transmissible, and the UK variant luckily is at least somewhat defeated by some of the existing vaccines we have in developed countries. So if the UK variant is what's behind this, we might be all right from a developed market perspective. If the Indian variants are odd and strange and vaccine resistant, the world may have a problem.
Yeah.
Like an economic problem, if nothing else, right? So
how do we prepare for that? Like, what's the bull case? What's the bear case? As investors, politics
Like
aside.
in the portfolio, you mean?
Yeah.
Oh.
it might make some sense to put on some tail hedges. If we can find some very cheap tail hedges, whether that is, index puts that are way out of the money for, cheap premium, or some other, we have lots of ways to hedge, right? You could buy short-term government bonds. You could short futures. You could, probably do something like Ackman did, where, if you have access to like swap markets, you could take puts out on, or swaps out on, investment grade bond indexes or whatever. Like, there's a lot of ways to do it, but finding some tail hedges that are very, very low price right now, might be interesting.
Buy some work from home stocks again.
Yeah, I mean, if you could spend 0.5% or 1% of the portfolio to hedge, the portfolio, even a good chunk of the portfolio for a month or two until we figure this out, might make some sense.
I mean, just based on the risks that I see with this, I'm like, yeah, I'd pay, a 1% or 2% for that. I don't know. Somebody just said the India variant is in my Providence in Canada with 750,000 people here. And then you always got the one guy, what's scary about a flu with a 99.5% survival rate?
Well, and that's what I was trying to say, is that even if it doesn't kill a ton of people, you're still going to have economic impacts that could cause ripples for, markets and investing. So
yeah, that's the risk, is like, politicians like to parrot that whole thing, like, oh, hardly anybody dies. Okay, yeah, if you're still parroting that after a year of this shit, then I don't know, keep your head in the sand, I guess. But like, the systemic risk to the global economic system is something we have to think about. And I don't know, maybe it could be another good buying opportunity though too.
It could
Well,
if it finally does create a sell-off.
A lot of the U.S. companies need a global recovery, economically. And they're relying on a lot of these countries. So there could also be supply chain issues, right, that continue to happen for certain industries. So I think that this is going to be a bigger deal than the market is thinking if, in fact, governments start to freak out again and lock down again. And even if it's not killing a higher percentage of people, I think that all we know and all governments look at is like, it's a COVID, it's a pandemic, it's, spreading, like we got to do something about this. We're going to shut down everything, and that's kind of the risk that I see.
Yeah.
But a lot of U.S. companies need these countries to get back to normal.
I don't think I don't know, man. How do economies survive another year-long shutdown? I don't think it happens.
I don't think it's possible.
Yeah.
I mean, do you?
I mean, I think it'd be a lot of what we've seen where the developed countries print money and literally support citizens and we kind of go back into, but I think psychologically, mentally, and financially for countries that don't control their own currencies, this becomes dramatically worse and certainly there's long-term effects of that are not good.
Yeah.
So and that's again why, like, even if the death rate's not super high, if this puts us back into shutdown mode in many places, it has real serious ramifications.
Yeah.
Certain industries, companies, airlines could go bankrupt, right? Like
That's my thing.
There's
Is I'm
effects.
thinking airlines.
Yeah.
What are they going to do? They need international travel to come back.
Yeah.
Desperately.
Cruise lines, they've got till mid next year before they're out of cash.
Yeah.
Cruise lines I don't even know how those stocks are still up.
Yeah.
Honestly.
Well, because because developed markets like the U.S. are emerging and showing actually quite a lot of economic strength in the data right now.
Yeah.
But
Well,
then
and
Right.
people are booking.
Yeah.
They just keep having to cancel month by month until they can actually launch.
Yeah.
But basically,
they have cruises in other countries too. It's not just the U.S.
yeah, but
They
I
have
think
European
most,
cruises
and somebody correct me if I'm wrong, but last I was reading is most cruises have been canceling through June, and now that's looking like even further out into the future.
Yeah.
And what like the large ones like Royal Caribbean, Carnival, they've got 1 to 3 billion in cash on average, and they're burning 250 million a month.
Yeah,
Am
I'd
I
have
kinda
to
on par?
look, but I think their burn rates have come down, and I think they have raised more debt capital recently. So I think that their margin is a little bit fatter now, but or their runway is a little longer than it was, say, 6 months ago. But yeah, they're not. I mean, they're not going to be able to survive if we have to go back in a lockdown for 6 or 12 months. Like they're.
I don't think any of us are going to survive.
I'm gonna be like, no, I don't care.
Yeah. I'm
I'm gonna go live in the woods and.
Yeah.
All right.
So-
Well, look, hopefully the vaccines stay effective. Hopefully these numbers collapse. Hopefully India gets the help they need. But in case they don't, let's entertain some tail hedges and protect the portfolios.
Exactly.
Yeah, just think about it.
Got to at least
Yeah.
think about a worst case scenario, right? As investors.
Yep,
That's
absolutely.
That's what we're talking about.
We're not
here.
politicians here. I don't care what your political beliefs are. We just look at the facts and the data and try to protect our wealth and grow our wealth. And if you do it right during turbulent times like this, you can make a lot of money. For anybody that doesn't know, these two were buying the dips in March like crazy in the stock market. We were buying the dip in crypto, bought Bitcoin in the 4, 5, 6K range. Like those create great opportunities. But if your head's stuck in some political zone or denying facts or whatever, you're going to miss those good opportunities. So
For sure.
to each their own. All right, we got a question that I wanted to bring up, and then we can get to the live chat questions. Monty sent this question. He goes, he or she, I don't know. Hey guys, love We Talk Money. Help me so much with grasping bigger concepts. You mentioned speculative investments in the last episode, and I was wondering if you could share your selection process, entry and exit strategy for speculative equity and crypto investments. I want to diversify my portfolio, but I have a hard time entering trades based off of fundamentals. In addition, it would be great to hear how you guys think of entering riskier investments at this stage of the cycle. Do you think, quote, the trend is your friend, or do you reduce risk and anticipate a market top? Thanks a lot. So basically what we need to do is we need to condense our 8-week boot camp with like 40 hours of training into like 2 minutes. Go.
I can't do it.
Yeah, there's a lot here in this question.
Yeah, we got to unpack this.
Yes. Okay, let's maybe simplify it for the sake of time, because I know we're running almost an hour and a half already. What are our strategies for finding higher risk opportunities and then getting in and getting out? I've got an answer for crypto, but for stocks or for any other alternative investment.
Okay, for finding speculative opportunities.
Yep.
Honestly, a lot of speculative stuff for me comes from the technical chart. So I'll do technical screens. So I'm looking for volatility. I'm looking for stocks that are trading a lot of range. And I'm trying to see what's up. Why is it moving? You know, a good example recently is it the Muds SPAC? Mm-hmm. That Muds SPAC and the Playboy SPACs, like those would have popped up on my radar, and I would have maybe been looking, you know, why is this moving so much, such a large percentage so fast?
Yeah. So
that's how I find them. And then as far as entry and exit strategies, that's a long explanation.
Yeah.
We've talked a lot about scaling.
Yeah. I like scaling in. I like scaling out. I like looking for technical areas that are lining up, that, you know, resistance levels that are matching up with maybe a Fibonacci level or something like that. So I do use the technicals. And in terms of like, one thing I do want to point out is I like speculative investments that are moving in the opposite direction or negatively correlated to what the broad markets are doing.
Yeah.
Because with the speculative stuff, I like for it to have a mind of its own, you know, because if it's just following what the S&P 500 is doing or what the NASDAQ is doing, and then that all rolls over, it all unravels.
True. So
those are kind of some of the points that I pay attention to. And I don't size speculative investments big. I size them speculatively with a small.
What does that mean, like on average for you? Like,
I mean, it could be like a 1 to 2% position
of your
max.
portfolio.
Yeah, of my portfolio. Like, depending on the situation, depending on the factors, like maybe 3%. But I don't try to go too big with speculative stuff.
Trav, what about you, bud?
Yeah, so I tend to approach things from a fundamentals basis. And like in our stock boot camp, we talk about lots of different fundamental factors that we can use for idea generation. And the more of those you have in one situation, the better. And so like GME as an example, you got a stock price that's washed out, low valuation. You know, this is when it was at $4, when I was like, this could be interesting.
This was prior to the long kiss of death. Okay.
You've got very, very, like almost an anomaly when it comes to the short interest levels back then.
Yeah.
And you've got a bombed out share price, terrible sentiment. You've got a low valuation. You've got a turnaround. And you've got a console cycle that was approaching. So you had numerous factors that were like kind of coming together with that. And I was like, you know, I don't think this is 100% probability this thing goes up, but I think there's a solid chance, a reasonable probability, whatever it is, 20, 30%, that this thing could have a massive short squeeze, right? So that's kind of an example. So we use this combination of fundamental factors. And a lot of times for stock specifically, if you want to get something that has asymmetric reward to risk, which is, you know, really what you want to find if you're looking for those crazy speculative opportunities, something that could go up 5, 10x with maybe only 50% downside or something. What you're looking for is anomalies. You're looking for something that the market is missing, something that it's overlooking. It's not going to be found on the front page of CNBC. It's going to be something funky or weird. It's going to be something where there's a, something unique about the situation and the sentiment. And then also you're going to have you're going to hopefully with a stock have the opportunity for both the multiple to expand and the fundamentals of the business to improve. That combination of those two things, the opportunity for the valuation multiple to increase, but also the numbers underlying the valuation multiple, the net income or the sales or whatever it is, the opportunity for that to improve over time. If you get those two tailwinds together, that can create those opportunities. So that's kind of generally what I look for. And like I said, in the stock boot camp, I have a lot more specific things that I look at for idea generation. End of the day, though, whether it's fundamental or technical, I think what you're looking for with speculative investments is high reward to risk and a better probability of the reward than the risk. So it's almost like I want to adjust that and say a probability adjusted reward to risk. So it's not enough to just go find lottery tickets, right? Your 100 to 1 or your 10 to 1. You actually want the probability of the reward to also be in your favor.
Yeah.
So you want above 50. So it's like if you're flipping a coin, you want to win more than you lose, and then on average have your winners be bigger than your losers over
Yes.
time.
A good example of that with putting it all together with GameStop would be, GameStop had all of the fundamental things that Travis was finding. It had a high short interest, which meant possible squeeze potential. It had a resistance level that it was breaking through on the technical chart.
Yeah.
It was bottoming on the technicals, meaning the price was forming a bottom. And so there were a lot of things that you could align with that to get to that speculative decision.
So the more reasons you have for a trade, the higher probability you weight it.
Lots of confluence.
And Nikki made a really good point earlier in when she made the point about sizing. So not only when you're scaling in to help, kind of manage, but also just like your overall sizing, whatever position size you're going to get to for something that's way more speculative, for something that maybe is a little bit lower probability, but a very, very high potential reward, you're going to size that smaller because chances are like the probabilities, even if you're identifying something interesting, are not going to be super high, right? They might be 30 or 40 or 50% that the investment hits. But if it does hit, you're going to get 10x or whatever, right?
Yeah.
But you size that small, like if you use like Kelly criterion or something like that for sizing, that will, if you punch those numbers in, you'll see that those will tend to be very small in terms of size, right? So when you find investments on the flip side that are very low downside, but maybe not quite as high as upside, that can actually be a bigger position in the portfolio because you have more confidence, less likely that you're going to lose money on it, so you can size it bigger.
Yeah.
So sizing is a big part of this. And lastly, if you are in a market cycle that has where you're already seeing lots of stuff in the market go up a lot, valuations are at high, very, very high levels, or in crypto, for instance, you've got lots of parabolic charts, you probably do want to take fewer speculative positions, fewer, of those 10x or bust type of positions, and be mindful of how many of those in your portfolio and the correlations of those in your portfolio so that you can not just be completely invested in high speculative stuff. A lot there, I know.
Here.
A lot there.
Well said.
Well said.
How do you think about it?
No, I agree with all of that, and I'll add, like in crypto specifically, like highly speculative positions, like early altcoins, like altcoins that listed and then they're in a range or they're really cheap, they haven't had a bull cycle yet. Anytime I'm putting capital into that, I'm accepting 100% downside. So I'm not going to say like if a token's at $1 and it just listed a month or two ago on a few exchanges and there's really no price discovery and it's just chopping around, I'm not going to panic sell if it goes down by half. I'm going to maybe size in a little more unless it's dying or it's going away. So I'll leave it open, and then once it hits a bull cycle, I'll take profit along the way. When we're mid-cycle like this, so like when we're 6, 7, 8 months into a bull market, my sizes will also start to get smaller at the top with speculative stuff. So I told the community recently, like, not only have I been harvesting gains out of a lot of my positions recently, but I'm also becoming more conservative with the sizes on new breakouts and new stuff. Because I had a couple over the past week that they were good setups, but when Bitcoin pulled back, they pulled back too. And I really just cut them at kind of break evens or losses or small gains or whatever. But the higher the market goes, the less aggressive I get, where like back in, September, October, November of last year, I was pretty vocal about getting aggressive. I'm like, look, guys, I feel like we have the rubber band effect. I see another bull market coming. I'm sizing heavy. It's all about timing in the cycle when you size up and when you size down. And the more patient you can be, the richer you're going to get. It's so simple. The people that are coming in right now going, I want to go on Binance or BitMEX and trade 100x leverage and I want to become a millionaire overnight. Sure, you might get lucky, but the odds are against you. If you're going to be wild and you're going to be impatient, people like me are probably going to eat your lunch.
Yep.
So be careful.
Especially late cycle.
Yep. So I don't know. it's impossible to know how high markets can go. And I say this every show. I am historically bad at underestimating how far bull markets can go. But I just get more and more paranoid the more and more insane market sentiment gets. If you would have told me in 2017 or 2013 or whenever, if you would have told me years ago that Mark Cuban would be on the Ellen show pumping Dogecoin, I would ask what kind of LSD trip you were on, because what?
Yeah.
You know, what world are we living in? And I love it. Don't get me wrong. I wake up every day with a big ass smile on my face. Not just because my portfolio is going up, but because of the time we're living in, right?
Yeah.
And the amount of people that we talk to in our community and just in public that are getting really rich. But, you know, there's always a but. And that's the bear markets and the people that don't know how to manage risk. And that's why we talk about so much of that, I think.
That's right.
So
That's why we're here.
awesome. Well, we have just gone for 1.5 hours.
Nice.
So I think we can go ahead and start to wrap it up. Guys, thanks so much for being here with us. Yeah, let's take a look at Coinbase really quick. I know we've talked about this. I still have my drawings up. So my prediction was way off. We don't even need to revisit that. We were all off. But that's why we don't buy IPOs, right?
Yeah.
Or
Right.
at least direct listings where the insiders are going to dump.
Yeah.
But, you know, I'm going to leave these drawings up. It would be really interesting to see if price action follows our
That would
our
be
little
really
path here.
funny.
Yeah. So basically we were saying, yeah, we want to see Coinbase like sell off, maybe go into an accumulation range and then give us a cycle. But I don't know. We'll see. Have you guys had any change of opinions on Coinbase or
No.
same?
Same.
Interesting, though, that it hasn't caught too much of a bid yet, given that crypto bounced back a bit in the last couple of weeks.
And Kathy Wood's buying it up.
Oh, yeah.
So, yeah, still under pressure.
It
Yeah.
almost makes me wonder, like, Travis, is there something wrong with us? Like, are we, because, you know, is Kathy just buying at any valuation? And are we just really, really picky? Like, what's going on here?
Listen,
Yeah.
She's a freaking huge money manager and she's buying it at this valuation. So
Yeah.
it almost makes me question, like, hold on, am I gut check here?
We're more patient and selective than she is.
Okay.
Yeah.
That's what I thought.
To be fair, too, like, we're not, how big is her fund?
Oh, that's a great question. I don't know now. It's been a while since I looked.
Tens of billions.
Yeah, she's got
right?
billions.
Billions.
Tens of billions. Tens of
Billions.
billions among all the funds together.
We're almost there, but we're not quite to tens of billions. But yeah, like to be able to work in a position size like that into something like Coinbase, that doesn't happen overnight. Like, say she wants $1 billion allocation or something, like, you have to buy when prices are coming down.
Yeah.
You don't want to buy during a bull market if you're trying to get $1 billion of fills.
Yeah.
Right?
Yeah. Yeah.
I mean, you manage $1 billion hedge fund. What would you do?
Oh yeah, no, you can't do it all in 1 hour or 1 day if you're a certain size. And if you like her, she has a lot more active flows in and out of the fund. So she by nature, or ARK by nature, has to be more active day to day, buying, selling, etc. So it's a weird game to manage that for them. And you know, if they like a stock, they can't be probably as price sensitive given their size.
Yeah. That's why, you know, we can actually
That's why we
outperform
get
on
the
a
alpha.
percentage basis. You know, we're not going to make as many billions. We'll make slightly less billions than them, right?
That's the dream, right?
Right? You know? Yeah. Listen, hey guys, thanks for joining us. We'll go ahead and start wrapping it up there. Anything else you guys want to talk about? What's happening over the next week in the markets? Earnings obviously have been popping off. Bitcoin's at a crucial area. Let's see what Ethereum's done during the show. I think it's probably chilling. Yeah.
We didn't talk too much about inflation, but that's still top of mind, and we're still seeing signals of increasing inflation in commodities and
True.
and also in company earnings calls are starting to call out, like Coca-Cola, Whirlpool, companies that make real products that we all use are starting to call out that they're going to start increasing prices on their products. So
Yep. Lumber
It's coming.
continues to climb.
Facebook ads went up. The cost has gone up 30%.
Yep.
30%.
Yep. Ad rates. Yep. Are up a
cray-cray.
lot. Yep.
Well, good
Wages
thing
are
we're
gonna start
done spending money on Facebook.
But yeah, the Dallas Fed manufacturing report also suggested a ton of issues in the labor market, where businesses are having trouble hiring. They're having to increase wages to try to find people.
That's facts.
So wage inflation, if that starts to come, that's going to drive pretty significant.
Yep. I
inflation
saw
later this year.
a local news interview with a restaurant owner. He owned a string of restaurants here. And he's like, I can't get servers to come into work. I can't get cook staff. I can't get servers. It's like they're making too much on unemployment right now.
Yeah.
But that's illegal, right? Like if you have a job offer and you still collect it.
They're supposed to take it.
Yeah.
Yeah. If they ever got audited or whatever, they'd get in trouble. Technically, the employer could tell on them.
Yeah.
I think that problem should fix itself over time, though. As people roll off unemployment, they're like, I gotta get a job.
Gotta get back. Yeah. I know we talked about this last week. Uber drivers, there's a lack of them, and there have been a few memes on Reddit recently with like basically making fun of all the business owners that are like trying to pay low wages and then wondering why people aren't coming back. So maybe that's the pressure that needs to happen. Like maybe we do need wage inflation at the lower levels to help incentivize people.
Yeah, I think so. I mean, I think, we've seen those charts that show capital taking away from labor for the last 3 decades and wages not keeping pace with inflation. So it wouldn't be the worst thing to have the service economy start to see wages rise. That should help the economy generally, help with consumption. But, if it happens too fast, it can be an issue for, lots of different areas of the market.
Yeah.
Yeah.
Well, we'll keep an eye on what happens.
Keep an eye on that. And it's weird, too, to think about all of that, the strength in the economy and the inflation signals, and then also think about the potential deflation risk if this India situation gets out of hand, right?
Exactly.
It's like, whoa,
it's kind of tough right now. We're in a tough spot.
But that may be where the tail hedges make sense, though.
Yeah.
Is that, it's not, the market's pricing the inflationary scenario and maybe starting to not price this black swan or gray swan. And maybe that makes those tail hedges cheaper.
It feels like we're walking a tightrope with you remember those old school, old timey, barbells where the old strongmen used to lift them up and it was round. Imagine one of those that's really, really far out and it's really heavy and you're trying to walk down this tightrope.
Yeah.
And over here you've got the deflationary COVID issues, blah, blah, blah. Over here you got inflation and it's like, oh my God, this is going to tip one way. And when it goes, it's going to go.
Yep, exactly. Yeah. That's, I mean, you said it. I mean, there's...
So either way, Bitcoin to the moon. That's all I got to say. And on that note, all right, guys, thanks for watching. Go to WeTalkMoney.com, submit a question for the show. Go to SkillIncubator.com if you want to join our wealth building community and hang out with us and come to classes and all that good stuff. And what else? What did I miss? Leave us a review on the podcast.
Review on the podcast, please. Thank you.
If you know somebody on Instagram that can help Nikki get her account back.
Yeah. If anybody can give Zuck a little smack on the cheek, that would be helpful too.
Hook a girl up, get her access to her Instagram account.
Maybe report the impersonator accounts if you get a chance.
Yeah, report the impersonator for me.
Yeah.
Well, hopefully I'll be back online soon.
All right, guys. Thanks for joining us. We will see you next week.